Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 19th, 2015. We're going to take a look at the gold mining sector. We'll take a quick look at gold, silver, and then a few mining stocks because I believe they're all at pretty critical technical junctures right now. So I'll try to go through this video a little quicker than most. I'll talk fast, and I'll just kind of brush on the charts real quick. So if you see something you like, go ahead and just pause the video and take a look at the chart a little more in depth. We'll start out here looking at GDX. You know, I've put up quite a few static posts recently mentioning this as a key resistance level here. You had this huge gap back from, let's see, that was July 17th. So the July 17th, Friday to Monday, July 20th, we had a huge gap down. And as expected, you know, we had a little bit of a very slight momentum overshoot there. In other words, the momentum was very powerful leading up to that. Prices managed to barely break above that level, but of course failed there. Had a pullback, and as expected, I pointed out here, there's a big gap from the day that they tested that. Let's try to get the crosshairs there from, so Tuesday, 8/11, and then we opened up on the 12th, had a strong day, and that's when we hit it, so August 12th. Pulled back, backfilled the 8/11 gap, and have since rallied off that level, and we're once again coming up to this key resistance. So I have I'll just say it, I have mixed feelings right now on this. Overall, this action has been undoubtedly bullish off the bottom. You see these huge volume bars that reeks of capitulation selling, possible selling climax, resistance. I often state this on the site. When you have a key resistance level, I almost always expect an initial, a reaction, I should say, on the initial tag. In other words, this was the first test of that resistance level. So what I'm getting at is we're not far from it now, and if we are going to break above, I wouldn't be surprised to see it happen on the next run because we've already had that expected failure. Everybody who was watching that gap sold at that level, pulled back. So we may break, but again, resistance is resistance until taken out. That's the important thing here. So if you are long the mining stocks, if you bought the pullback on this gap, I believe I had pointed that out the other day. I've been a little neutral, stepping back from the miners. I had a couple good trades recently there, but if you did buy that gap, keep in mind we're coming back to key resistance, so it might be a good time to either tighten stops, book profits, or even take, one could even short this level and try to get a pullback trade, maybe another reaction off there. You know, very possible we turn down and go lower, but like I said, the case for a bottom in gold and the mining stocks, especially the miners, seems to be building here lately. Okay, so as I often state, the miners will follow the metals. So ultimately, there's temporary disconnects. So if you want to know where the miners are going, you have to keep an eye on gold. And gold is pointed out here. There's several resistance levels overhead. Gold, as with silver, has a lot of work to do. There's a tremendous amount of big, important, critical overhead resistance areas that used to be key support areas that were broken. You know, we had this triple bottom here that broke. And so if you look at, I have a horizontal line here, this white trend line. There's a candlestick there. After prices broke down, that was the big, really when the bottom fell out in gold. You know, this was a key triple bottom support, and when that broke down, we gapped below, and then the following day an even larger gap. So bullish so far. You know, we've had this rally, but keep in mind gaps are often backfilled. You know, I don't want to sit here with double speak on this video. Like I said, I have mixed thoughts on gold, and that's why I'm stepping back. You know, and especially at this time being a little cautious. Yes, the momentum is there right now. The trade has been good lately to be on the long side, even long and short, you know, that pullback off support the other day. But I did want to point this out. So as just mentioned, we had GDX, as we looked at a minute ago, coming up on resistance. Gold here, we have resistance here at the bottom of this gap right here. I should say that's the same, the July 17th to July 20th gap. We're coming up on that. And if it takes that gap out, just above that, this orange line here, around 109.60th, 109.60, give or take, that defines that triple bottom in gold from 2014, 2015, those three bottoms there in gold. So gold has its work cut out for it on the long side. It's nice to see this downtrend taken out. That's a downtrend that goes back all the way to 2000, the October 2012 highs. You can see here looking at this. But I don't put as much stock into that downtrend anymore because we had this breakout here, proved to be a false breakout, and then prices traded through it, above it. It respected it, you know, on the way down, and then had a gap below, and we're back above it now. In my opinion, when support or any trend line or horizontal support or resistance level is traded through too many times, it takes away from the validity. But either way, I left it on my charts. So that's gold. As I said, we have some work to do, and we are approaching a pretty key resistance level. Now keep in mind, we never hit that level the other day. I pointed that out about a week or so ago. Back on August 12th, we came close, but still fell shy. We didn't backfill that gap yet. So this would be the initial, if we get up just a little bit higher, the initial back test of that, or backfill, I should say, of that gap. And let's see if I can hit that candlestick. The low is 108.40. So the top of that gap there is 108.40. We're at 108.16 right now. So gold is just below key gap resistance. Silver, talked about this quite a bit. We had a breakout. This was a level. Silver had a similar triple bottom, 1, 2, 3, broke below. Tried to regain that last week. Was able to do so for about 2 days, traded above and then fell back below, and the reaction was pretty sharp. Now we're pushing back up, and it is once again just below that key resistance level. So silver, as with gold, is sitting just below support. I'm sorry, resistance. So be a little cautious again if you're currently long the miners trading this most recent bounce. Either consider tightening stops up, taking profits, and aggressive traders can certainly short here, either on gold, silver, or the miners, and try to get a pullback, one more pullback off that level. Okay, I promised to do this quick, so we're looking at GDX, and on the left of this chart over here, the left-hand side, we have all the components of GDX, and we're going to run through these charts very fast. Don't pay too much attention to all these trend lines. I haven't cleaned these charts up in a while. These trend lines have been up here for a while. We're just really focusing on the most recent price action here. Okay, so what I'll do is start from the top down on my related items list. If I click on GDX, it populates all the components, and I sort these by market cap. So we're looking at the largest in there, and that's Goldcorp, you know, at about a $12 billion market cap. Goldcorp, I'm neutral to somewhat bullish on this chart near term. You know, we had this huge gap here. Goldcorp managed to take back, I'm talking about this horizontal line, it did manage to take that gap back. This was a bullish falling wedge pattern, which it fell out of. That was very bearish. You know, most traders are looking to position for an upside break, and so when you have a downside breakout of a pattern, and remember, all the gold stocks fell hard at that point. That's that same big gap we looked at, the July 17th to 20th gap there. And we've taken back the top of that gap and have held it. You know, Goldcorp, you know, gave it up a little bit right after, but came quickly back up. So we've reclaimed that gap support. However, as with everything else, we have some work to do. Here's the next level, around 1590-ish. There's some pretty good reactions and a little gap there. And above that, just a major resistance level that used to be key support. You can see, you know, tested from above 1, 2, 3, 4 times, finally broke down, and then that level was tested from below. Former support becomes resistance, and so, you know, over time, if the miners continue to show some strength here, especially Goldcorp, that's where you're going to have some struggles, in my opinion, and that's, what did I say, the 1690-ish area? Oh, no, right about $17, so that's Goldcorp. All right, moving a little faster. Next one up is Newmont. Here's some key reaction lows from back in late 2014, November, December, multiple tags, and then recently prices fell below there. And as you can see, we're right now, just zooming in today, we're just literally, there's a little doji forming right on that support / resistance line. Call it resistance now because it's yet to be taken out. Again, we had those momentum overshoots the other day. So there's Newmont at resistance. If it takes that out, I haven't updated this chart recently, but I would definitely put a resistance level here. This would be the next key resistance right around $20. And I do see some minor resistance right here. There's that reaction high, and there's also some reactions in there. That comes in around 1850 Newmont. ABX Barrick Gold. Here's a nice gap right here. I should actually have the top and the bottom of that gap highlighted, which I do now. So there's a gap resistance zone. So all in all, right now it doesn't really have a lot of resistance just sort of hanging in there. I guess the next resistance would be this previous reaction high around 1860 from last week. So if Barrick manages to push a little higher, that's where you're probably going to find some resistance here coming in around the 1850-ish level. FNV, Franco-Nevada Corp. We have numerous reactions here. This is going all the way back to 2014. 1, 2, 3, 4, 5. So these two lines here are resistance. It's a resistance zone. Two lines close together I label as a resistance zone. And we're right smack in the middle, really towards the top of that resistance zone now. We had a brief overshoot. Again, momentum-fueled overshoot the other day. So there's FNV trading at resistance as we speak. Okay, I brightened up the symbols a little bit so you can see it in the background. Here's symbol GOLD. This is Randgold. Randgold, quite a mess. Very messy chart, a sloppy chart, if you will. And these two lines here, I'll color this one a little bit brighter so we can make it out. Here's a resistance zone to contend with. Quite a few gaps here. If you could add horizontal lines at each of these gaps. Prices often tend to, especially on the first test of gaps from above or below, tend to have a reaction. So, here's your lines here. So again, some work to be done. We need to get above the current levels, today's highs, and if it does, it's probably headed up to around the 65.30 area. And of course, that's assuming the sector as well as the metals hold up. Always trade the individual golds as well as GDX with an eye on the metals at the same time. Moving forward, SLW, Silver Wheaton Corp. This one actually looks pretty good. We had it looks horrible from this point, but more recently we had this, it looks like made a higher low down here at the bottom. Nice, like everything else, a lot of capitulatory looking selling with these high volume spikes here. And this was a base. I had this horizontal resistance line. I think might have mentioned this one on the site. I'm not sure. 1357, called 1360-ish. Quite a few reactions. We took that out, and we've been able to stay above it. So far, we're trading around $14. And if you look at the volume price histogram over here on the left, it's very thin. There's not a lot because the stock just dropped off. That is comparable. It's not the same thing as a gap, but very comparable to a gap because very few trades occurred in this level. So this is what I call a thin zone, all the way up here to about 1670. And at that point, you have a big gap here to contend with in that previous reaction low. So over time, that is, if the miners continue to rally in the coming weeks to months, that is where I would be booking profits. I wouldn't even tighten stops if I was long SLW, or if I am long SLW at the time. That's where more than likely, depending on the charts of GDX and gold and everything else, if they confirm, I'll be booking profits just before that level. Next one up in line is AEM, and this one has this line here that I'm highlighting right here, about 27.07, call it $27. Quite a few reactions all the way back here, 2014. There's a reaction. There's a huge gap with a reaction high right under, or reaction under that gap. Another reaction. In this, where you can see that was support at that point, and when prices broke below, you can see the very impulsive selling, which helps affirm or validate that support level. And once again, broken support becomes resistance. So here we are, 27, and it's not an exactly defined level at 27.07 as it shows here as I highlight that box pops up. So we'll call it the $27 area, and we're at 26.67, so we're getting close on AEM. So maybe time to tighten the reins on that one if you're long. Okay, RGLD, Royal Gold. There's that huge gap. keep in mind, as I talk about, birds of a feather flock together. So that 717 gap down on GDX in gold and silver, it's not coincidental that you're going to see almost comparable or similar gaps down on the 20th, July 20th when we gap down. So there's that huge July 20th gap. And Royal Gold has been working its way, and it just nearly kissed it today. So if you see here, look at the candlestick, zoom in a little bit. We're almost kissed the top of that gap. We actually hit the, looks like the 50-day moving average. And this is what I talk about a lot. This is a reason on the site where I set my price targets below, a few cents below actual resistance levels. Because if you're trading gold, I can tell you this, traders are focused on technicals, not fundamentals. When we're talking days, weeks, investors focus on fundamentals. So traders, unless you're blind or shouldn't be in the business, everyone's watching that gap. So if that gap, which it is, I'll tell you where it's at. Let's see here. Low is at 56.75. If I'm long RGLD, I'm not going to put my order in at 56.75 because I know there's going to be a stack of sell orders right there. And more than likely, that stock, it may kiss that gap. It may briefly overshoot it, but there's a good chance it can reverse just shy, which was the case today. So today we went as high as 56.33. And so far the stock reversed. So it may never get there. That may be close enough to a backfill. It may be not. So that's point is you want to set your sell limit orders a little bit below actual resistance levels, especially if they're well watched levels like a bottom of a gap in this case. Okay, moving on. EGO, we had a reaction here. Let's see if we can make that out. Big long candlestick back on January 30th. And that I had a line there. We also had some reactions once we broke below that level. We tested it from below, and yesterday, as a matter of fact, tried to test and fell again just shy of it. You can see that the top of that candlestick, the wick is just below that level, and have so far had a pretty violent reaction. We're down almost 9% after having a near test of that, or effectively a test of that resistance from below. AU, too beautiful. There's a big, here's the gap defined, that big July 20th gap defined by these two lines here. As you can see, we went up, had a near test the other day, fell back in line with the gold stocks when GDX also hit their resistance, and have since bullish action, price action, because AU has powered up but has now essentially backfilled that gap. So to be going long AU here or adding to a long position in my book is just contrary to trading. If the stock's going to go on, which it very well may, wait to see that gap taken out, and of course make sure GDX takes out resistance. So you're looking at a stock at resistance, and I would imagine, and I might personally do a pullback trade here. You can short AU, right here it's at 737. The bottom of that gap, or I should say the top of that gap, which is the lows on July 17th, is 746. So you're within 9 cents from the gap right now. You could short it with a stop somewhat above. When I say somewhat, it's all relative, maybe around that 756 area to allow for a little overshoot, and target a backfill of the gap again, or move back to the support level here, or even ride your stops down if this is it, because as I mentioned, gold, silver, and the miners are approaching some pretty significant resistance. If I'm trying to get through there, you could trail stops down, and this could turn into a much more lucrative trade if there's another leg down in the gold mining stocks. So trailing stops work very well in these situations. KGC, this is a nice chart. We had numerous reactions right here. So I had a support zone which was broken. Prices came back up, back tested the bottom of that support zone right here. So today I just added this trend line here. We have a downtrend line off the highs back here in early January of this year. So 1, 2, almost 3, now 4. Call it 3 or 4 reactions so far, as well as horizontal resistance. So here's a stock at resistance right now, and again, another reason to be cautious right now and adding exposure to the mining sector. That chart, That's just a weekly chart. Didn't mean to do that. Let's look at the 2-day chart. This was another trend line I've had on here for a while. This trend line had a brief fake out back in January 15, early January. So when we were looking at that daily chart a minute ago, which I'll go back to here, that's that trend line. It goes back for a while. So if and when we break above there, this would be the next resistance level. And in fact, it's not marked on here. We have some really nice horizontal resistance defined by these reaction lows here, right here, and then once we broke below, that level was tested from below once, twice, 3 times. So we have intersecting resistance. We have, if prices shot up right now, more than likely we're going to hit this downtrend line first, which you have to watch out for. And then if it manages to get through there, the $2.60 level, 260, would be a very formidable resistance level in my opinion. AU, there's that big gap. It has been trying to get up and has had several failed attempts so far to clear the gap resistance. If it does take that out, and again, the mining sector moves up, I don't see much all the way up until about the 334 area. So again, there's a mixed bag. There's a lot of upside potential, but we're not there yet. There's still some work to be done technically on these stocks. So AU would probably, if it can clear that level and the mining sector moves higher, you're looking at a move all the way up to the low to mid threes, and then above that, I have that horizontal line there around 446, and I should add one right here about 485. That would be a longer term swing target there for AUY. GFI. This is a sort of a descending price channel I have drawn here, so we're at the top of that descending price channel, as well as these reactions back from late 2013, early 2014. So we have these reaction lows. They were tested again here. That support broke at this point. Prices fell down sharply and have since struggled. So this is called the $3 area, give or take, and that's what we're dealing with right now. So quite a bit of resistance here on GFI. TAHO, here's a big gap here, Tahoe Resources, and we, again, momentum overshoot intraday, as you can see when we zoom in on that candlestick. The wick was above, but the body is below, meaning prices managed to close back below there, and we're not far from it again. So I could go on and on. I'll stop here because this video has gone longer than I wanted to, but you get the point that the miners are at a pretty critical technical juncture right now, and I just can't say near term will they have the impetus to power on through there and continue higher. It's possible, since most of those levels have already been tested once, but again, you probably safer play is to wait to see those levels get taken out, particularly on the metals as well. The miners can sometimes get ahead of themselves. So and again, if you're an aggressive trader, we're looking at a lot of stocks here at resistance, and you can short here with relatively tight stops overhead and either target some of those downside areas, those downside support levels that I showed, or just run a trailing stop. And these could open up to be, multi-week swing trades if the metals take another leg down. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.